Hello, welcome back to the SovrenFx YouTube channel. What's going on? Hope you had a successful trading week, having a great day, caught those pips. Okay, so without further ado, let's dive right into today's video. So as the title and thumbnail reads, today we're going to talk about how to trade fakeouts. So this is a basic price action strategy that helps you identify and profit off fakeouts. So I've gone a step forward and drawn out candles. This wasn't easy to illustrate how fakeouts come about in the market and how you can avoid them and use them to your advantage. Okay, as you can see, price right now is bearish, moving in a downtrend. So here's how I enter the market. Once you look at the charts, have a mindset that if price is bearish or bullish, okay, well, in this case it's bearish, make sure if all higher time frames agree that price is bearish, make sure you're only looking for sales. Anything apart from sales, have it at the back of your mind that you're going to lose your trade. So that's what keeps me on track, basically. Okay, so the pain of losing a trade, the pain of missing a trade, and the pain of losing a trade. The pain of losing a trade is worse. So it's better you miss a trade than lose a trade. Okay, so you always want to let the market lead and you follow. Don't try to be a leader and go before the market. Okay, so with that, price is in a downtrend, so we are only looking for sales, right? So in this situation, what I had prepared is, when you come to the market and finds a downtrend, you draw your zones. Okay, so the first zone here, we have our support, and around here we have our resistance. So in between is what we call a range. Range isn't necessarily when price is consolidating. Range is the distance, or rather the space between two zones. I hope you can. So this is a range, basically, and this is what happens when price is in a range. So what is a fake out? A fake out is basically when price falls, breaks out of a range, then closes back in. That's basically what a fake out is. So in this example, price was in a range, closed above. All beginner traders, all demo traders, people who lack experience will enter buy at around here. But as I've told you earlier, when the trend is bearish, always keep in mind, look for sales. If a buy opportunity occurs, tell yourself that's going to be a loss and you're going to stay out of that trade. Okay, so this was what happened next. After price closes above the resistance, price closes back in. So this is what I refer to as a fake out. So once I observed this, basically I was anticipating, if price closes above a resistance during a downtrend, you anticipate that it's going to close back in and fake out. So that's not always the case, but you want to anticipate so that you cannot go for buys earlier than expected. So this has a sell around here, then it will go back to retest the lows and fill the range. Simple. So 80% of the time when price closes back into the range, it goes on to fill the range and continue with the trend. So basically that's the illustration I had for you. So using this illustration, I want to talk about ranges, types of ranges, and how you can use ranges to your advantage to avoid fake outs. So here we're going to refer to this as our range 1. This is our range 1, and this is our range 2. With fake outs, basically, so range 2, let's for instance say it runs to around here. So with fake outs, when price closes above the range 1, then it closes right back in, false breakout, right back into the range 1. That's a fake out. So where do we get buys? I only look for buys after price closes above range 2. For instance, if this candle actually closed above here, that's when I'll start looking for a buy. But if it closes right back into the range 1, this is basically a fake out. So that's how you're going to use ranges to determine where a fake out would occur and where you could get an actual breakout. Okay, so I think that illustration is enough. Let's move on to price itself and how price actually looks like during a fake out. So with ranges will always be there. You can call me in the morning, call me at night, but price will always be in a range. Okay, so around here, okay, this is almost picture perfect breakout. So you could pause the video and anticipate where I draw my ranges. Okay, so here we're going to have my range 1. This line signifies a zone, and the zone is basically supply or resistance. They're basically the same thing. Here we have our range 2, basically the range 1 support. Okay, so how do you identify a fake out? When the pricing, when you're in the market, basically. Okay, so first things first, identify the trend. We are in a bearish trend, and during bearish trends you don't want to look for buys. So when price starts moving bullish, you don't want to FOMO in, you don't want to have the fear of missing out. So as I told you earlier, it's better to miss a trade than to lose a trade. The pain of losing a trade is much worse than missing a trade. So price closed above, and as I've said before, me too, I also used to get into these trades, enter buy to fill this range, and you wonder why it stopped you out. Rookie mistake. Price closed above range 1. For buys to be considered, price has to close above range 2. That's a true breakout. This breakout could either be a false breakout or rather a consolidation around this area. So you only want buys above here and sells only below here. Okay, so this is what I would have done in this situation. Price closed above, as I'm anticipating a fake out. Price closes below. Have short positions, stop loss around here, but you have to understand this is the hourly candles and stop loss will be much wider. But I'm using this as an example to illustrate the fake out example. This wouldn't be a viable trade for me because the stop loss is way too high. As you've seen, price closed back into the range, and inevitably price has to fill the range. That's basically what price action is. Price makes a low, pulls back, retests the low. Here's where many people get caught off guard, faked out, lose a trade. Okay, if you go to the lower time frames, a better entry for buy maybe would be around here, range 1, range 2. So price closes above range 1 and range 2. We only enter buys if this candle closes bearish but above range 2. This simply signifies that price is respecting the support, and you could enter your buy on the break of these highs. Have your stop loss around here, and for price to fill the range. But this is not viable in the 1 hour because the 1 hour hasn't broken range 2. But I'm sure in the lower time frames, this was a range and this was a range. Okay, don't think there's much I'd add. Maybe I think that's pretty much it for fakeouts. Okay, in the next video I'm going to talk about tradable ranges and untradable ranges and clean traffic. For example, this here is clean traffic, and can't seem to find it. Okay, bear with me. So in the next video I want to talk about clean ranges and tradable and untradable ranges, like which range would be considered for a trade, which range wouldn't be considered. So basically I don't want to stretch this video so much, but just to give you a tip of the iceberg, for me I always take profit at around 10 pips, and that's at least a third of the range. If a range is below 10 pips, it's not even worth it. So that's just the tip of what we're going to talk about in the next video. With that, hope you have a successful day. Trade cautiously, follow your plan, don't trade using emotions, just stick to your plan, and everything is going to work out. Don't forget to like and subscribe. You could also join the free Telegram where I call out free setups and analysis. See you next time.